Step 1, invest. Step 2, old people. Step 3, profit. How's it going, everybody? Tristan Powell here. Today in this video, we're talking about the huge growth potential in senior living. As many of us know, that the Western populations are getting older. That means more of our population is over 65 than below 15. So there's a huge amount of people in the old seniors category that are going to start needing amenities. They're going to start needing senior living homes. They're going to start wanting to travel. All these people are retiring, and there's a way to invest in this. So one way you can take advantage of this elderly growth is to invest into real estate. So I'm not just talking about your apartments and your regular homes. I'm talking about old folks' homes and care facilities. Genuinely, just any senior housing in general. And I'm aware that most of my viewers probably can't go out and buy a freaking old folks home. It's a lot of money. I've looked. So what I would do is I'd invest in a REIT, which is short for Real Estate Investment Trust. So what that means is it's pretty much a company that owns a whole bunch of different pieces of real estate. So you can invest in REITs that are specific to old folks' homes. So these real estate investment trusts only own old folks' homes. That's what I would do to take advantage of the real estate side of old folks' growth. Another way you can invest into the aging population is to invest in healthcare. Healthcare is the most expensive thing elderly people have to deal with in their life. Healthcare is actually the most expensive thing all people have to deal with. But senior citizens need more healthcare than the younger people, because younger people are usually more fit. So most companies that deal with healthcare are probably going to see some strong growth within the next 10 to 20 years. This also goes for drug manufacturers as well. The third way you can invest into an aging population is through travel. Old people love to travel. Old people nowadays are more active than they have ever been. Honestly, I see more old people out running than I see people my age. Probably because we're all inside making YouTube videos. Anyways, travel is going to be huge because all these people are going to want to take their retirement money and travel the globe. So I'd invest in luxury hotels, cruise ships. Old people love cruise ships. And I'd also invest in airlines, because these are all methods of taking advantage of a successful travel industry. So Conrad von Merberg commented, "I liked the stock review. Many of us dividend investors like retirement homes due to the aging demographics. Could you touch upon companies like Extendicare, EXE, Chartwell Seniors Home, CSH.UN, and or Sienna Senior Living Care, SIA? These are not all the same regarding value, but to hear some analysis would be great." Thank you so much for your comment, Conrad. We're going to go over your 3 stocks. So the first one you wanted me to look at was Extendicare, EXE on the TSX. Extendicare is a Canadian real estate REIT. So it owns old folks' homes and long-term care centers. It has a monthly dividend and it pays a 6.7% yield. So it has a pretty high yield. So although Extendicare has a super high yield, I don't like how Extendicare doesn't seem to have any stock appreciation. This chart is a 10-year view of the price Extendicare has had, And well, it doesn't seem to move a lot. So yes, this is a good place to park some money and just collect some dividends. But in my eyes, I like to get appreciation with my stock as well as a dividend. So if you're a type of investor just looking for some cash flow, EXE is great. The second company you asked me to look at was Chartwell Seniors Homes. Well, Chartwell Seniors Homes goes under CSH.UN on the TSX, another Canadian company. It pays a monthly dividend and a 4% yield. I like CSH.UN because it has more than just a dividend. See, this chart is a 10-year chart showing the stock appreciation, and over the years it appreciates. So I believe if you bought some shares of it now and held it for another 10 years, you would see some growth. In the last 10 years here on this chart, CSH.UN has increased about 53%. The third and final company you wanted me to look at, Conrad, was Sienna Senior Living, or SIA on the TSX. So once again, another Canadian REIT that focuses on senior living. It's a monthly dividend payer, and it also comes with a 5% yield. This here is the 10-year chart for SIA, Sienna Senior Living Incorporated. I like this chart because, like CSH.UN, SIA also has an appreciating stock. So over the last, over the last 10 years, it has increased 53%. So about as much as CSH.UN. But it also has the dividend, so this makes it even better. My favorite stock of the group was SIA. It had a smaller dividend than it had a smaller dividend than EXE, but it had a lot more growth than EXE, and it had about the same amount of growth as CSH.UN, but it had a higher dividend than CSH.UN. So the same growth with a higher dividend means that SIA is the best all-around stock. And take that as you may. It's good for who I am, the kind of investor I am. Maybe one of those other stocks would have been good for you as the different type of investor you are. So it's just my opinion. Thanks for watching, everyone. And remember, the first person to drop their stocks in the comments below gets them featured in my next video. So please drop your comments below. Please subscribe. The more subscribers I have, the more videos I can make. And leave a like, and that's all. So I'll see you in the next video. Good luck on the markets.